Welcome to another fun-filled and informative and educational, hopefully anyway, broadcast with me, Lark Davis. Super excited to see you here as always. Excited to have a conversation with you about the latest things happening in the cryptocurrency space. Today, big news to cover. I know I say it all the time, but it's because big things keep happening. We have big news from PayPal in their stablecoin release, more rumors, Chinese whispers, if you will, about the BlackRock Bitcoin ETF. Somebody lost $4.5 million worth of Ethereum. That's crazy. We got to cover that. Also, want to look at the bear case for the markets right now. I know it's so easy to get just caught up on. Well, let's just talk about all the exciting stuff going on. There's also, of course, the potential for a bear case in the market. I want to talk about that with you as well. Lots to dive into, layer 2 scene, and much more. So let's get into it. Let's dive into the big stories of the day. The BlackRock Bitcoin ETF. Mike Novogratz, he's the head of a famous venture capital firm and investment company working in the digital space called Galaxy Digital. Well, his sources working with Invesco and working with BlackRock have been releasing some rumors to him. Now, this is pretty interesting. According to contacts from inside BlackRock and Invesco, the approval of a Bitcoin ETF is when, not if. When, not if. So there's still a lot of people out here who are thinking that BlackRock's not going to get it. The SEC is still going to be the SEC. They're going to shoot it down. Now, they might delay it. I fully expect some delays to come in here. But to see them completely shoot it down, BlackRock doesn't like being told no. Gary's going to be in trouble. Gary Gensler, the head of the SEC, he'll be in a bit of trouble if he tries to play too much hardball with BlackRock, right? We'll see how that plays out. But insiders are saying, now is it all psyops? Who knows? It can always be psyops. But insiders are saying that yes, we're going to get a Bitcoin ETF approved and that it could be 4 to 6 months away. Now, those are some very interesting timelines. Of course, we have the Ark Bitcoin ETF that's coming up in a few days for the deadline. The SEC is probably going to kick the bucket down the road on that, which brings the Ark Bitcoin ETF down to December. The other ETFs, they've mostly got their first deadlines coming up in October, or is it mid-September? Coming up soon, regardless. So not that far away. But 4 to 6 months, it's an interesting timeline because 4 months from now, end of the year, essentially, not a lot's going to be going on. Everyone's going to be paying attention to everything else. Christmas is coming. Thanksgiving was just here. You got to buy the presents. And then blammo, Bitcoin ETF approved. That would be like throwing a hand grenade into a bucket full of monkeys, man. It'd be a real crisis for the markets in a good way. Things would explode. It'd be a wild situation. The 6-month timeline, though, that becomes even more compelling because if a Bitcoin ETF gets approved in 6 months' time, that's about February, approximately, let's say, late January, February sometime, then it doesn't start trading the next day. It needs probably 4, 6, 8 weeks to actually start trading. And guess what's in April? The Bitcoin halving, baby. The outer end of this estimate from inside sources at Invesco, at BlackRock, who are leaking this information out to Mike Novogratz, have said it could be up to 6 months. That's what we're hearing from the people that we're talking to at the SEC. That lines up with the Bitcoin halving. I mean, it's like the stars are aligning for a mega pump for Bitcoin. Pretty crazy stuff when you start to think about it. Now, of course, on the back of this news, Bitcoin got a little bit excited today. Didn't do too much, of course, but we got a little bit of excitement here for Bitcoin. We did see the price come up to $30,000, get smacked back down at the time of recording, of course. We'll see how that continues to play out. Nice news is we're back above the 50-day exponential moving average for the time being. We know these reversals can come in pretty hot and fast, as we saw, for example, back here on the 1st of August, where we had a nice breakout and then slammed right back down. Basically, Bitcoin's still completely stuck in a range here. We haven't actually seen Bitcoin do anything super exciting since June 21st. We've been stuck in a range for Bitcoin since June 21st. We're on the lower end of that range right now. Oh, well, we're actually dead square in the middle, but yesterday we were on the lower end of that range. And the current price of Bitcoin is basically the median price that Bitcoin has been at for months. This is a boring market. This is a boring market right now, but it's not going to remain like that forever. When the Bitcoin ETF gets approved, and according to sources at BlackRock and Invesco, it is going to get approved. It's not a question of if it's going to approve, simply when it's going to be approved. When that happens, hold on to your butts, because a lot of money is going to come in. Remember, 20 to 30 billion dollars. Those are the estimates that we're looking at right now. And that is enough money to buy up hundreds of thousands of Bitcoin. So you cannot tell me that is not going to move the price. If you're buying Bitcoin right now, you are front running the Bitcoin ETF approvals. So just keep that in mind. They will come. They will come. Whether Novogratz is getting the right information or not, hard to say. Again, could all be psyops. But I remain bullish on the potential for TradFi, traditional finance, to get aped into Bitcoin. Tom Dunleavy shared this chart. The loss of Alameda, Jump, and other big market makers is being felt. So we had Jump. We covered this a few months ago. They left U.S. markets because of the SEC regulatory scene. And volume has been so low for months. Shockingly low volume. This is like the situation where essentially it's dead as a doornail right now. I don't know why doornails are dead necessarily. I've never really fully understood the dead as a doornail saying. Maybe I should look that up online later. Anyway, it is dead as a doornail right now. And it's pretty crazy. It just feels like we're in the eye of the storm, right? We had all the chaos and carnage of 2022, some exciting things in early 2023, and now nothing's happening. I know there's still some money on chain being made. We talk about those narratives. We're going to talk about those narratives. But Bitcoin, it's been pretty quiet, man. Pretty quiet. How you guys doing out there? Let me know. Let me know if you're still bullish on Bitcoin. Bullish from the bottom, bullish from the lows. Curious to hear your thoughts as always. Chris Berniski sharing this. Currently, tourists are inactive, while residents are accumulating swiftly, owning 74.8% of all the supply of Bitcoin. That's pretty interesting. That's consistent with an early stage bull market. 30% of BTC has left exchanges for cold storage since 2020, leaving exchanges with just 2.2 million Bitcoin. It's pretty interesting. It's an interesting time to be here. And if you are here having this conversation with me, talking about crypto, you are the exception. People at the top in 18, 24 months' time, when all the tourists come back, they're going to be buying everyone's bags who's here right now. If you remember to sell, of course. Don't cheat yourself out of intergenerational wealth, guys. Remember to click the sell button at some point. But the tourists are not here. When the tourists come back, volumes will pick up, things will go crazy. We'll be in the new paradigm of money phase again right now. But right now, it's basically just the hardcore people, the long-term believers, the users of the technology. And again, the 2022, 2023 bear market, wildly, dramatically different compared to the 2018, 2019 bear market. So much busier these days. So it's pretty exciting. Now, before we get into the rest of the story here on the Bitcoin ETF, if you are a trader and get yourself an account over at BYBIT, it is the best place for trading crypto. If you want to trade futures, they got you covered. Huge futures markets. You want to trade exotic spot altcoins or just the most popular spot altcoins, they got you covered. You want to do copy trading, you can do that too. Very popular copy trading service over on BYBIT. And if you use the link down in the description, you'll get exclusive fee discounts as well as exclusive deposit bonuses up to $30,000. So check it out if you are a trader. Now I want to share this one here. This is from Andrew at Ape Abacus on Twitter here, always sharing rumors of what's going on. There's a possibility that the Grayscale decision comes before any other spot Bitcoin ETFs are approved or not. So right now, Grayscale has been fighting the SEC in court, arguing that there's no reason that they can't turn their Grayscale Bitcoin Trust into a Bitcoin ETF. Now, if the courts agree, if the judges agree with them, that is basically a bitch slap to the SEC, who will then be forced to play their hand. The Bitcoin ETF approvals could even come sooner in this situation. But until we see that happening, can't get too excited. But there's a lot of rumor that this could be happening sooner than later, maybe the next few weeks even. And if that happens, then we're going to see the Ethereum futures ETFs getting approved. That's, I think the market's basically assuming that's definitely going to happen right now, because we had 13, 14 filings for Ethereum future ETFs in the past 2 weeks. So we'll get Ethereum futures ETFs. They're derivative products. They're paper. They're garbage. They're trash. I don't like them. I'm not excited about them. They're not really going to do much for the market. They might get people a little bit excited, maybe, but I'm not excited about them. I don't think there's any reason to be excited about Ethereum futures ETFs. What I'm excited about is spot ETFs, because spot ETFs gives people real access to the real assets, not the paper garbage that Wall Street can manipulate, which is interesting. As this guy points out, lots of softening within the SEC on these products, mostly based on the fact that they ran off of traditional finance rails. See, this is what a lot of it comes down to. This is why we think the SEC is going to approve a Bitcoin ETF and eventually an Ethereum spot ETF, because it lets traditional finance, BlackRock, JP Morgan, the NASDAQ, all these kind of players have a major stake in the game, whereas others will get pushed out. Remember, this is some mafia crap here. These big Wall Street banks, they crush competition. That's why they're part of the reason why they're going after BINANCE. Now, BINANCE has actually committed any crimes that'll come out, of course, in court cases. But let's assume that they haven't. And this is all just Wall Street trying to play some Machiavellian games and crush their competition. They want to control the markets. They understand the market's going to get bigger. They understand crypto is going to multi-$10 trillion market cap at some point. They want to control that. They want to be the ones making the money off that. Interesting. This guy here speculating that Grayscale is going to win their lawsuit, and that insiders, some people already know. Some people already know. That's why we saw the price of Bitcoin spiking today, not off of Novogratz's rumors, but actually off of insiders getting an early taste that, hey, actually, Grayscale is going to win the case. We're going to see a Bitcoin ETF sooner than a lot of people think. Interesting as well. I want to share another chart from Stock Money Lizards. No love Stock Money Lizard charts around here. This is a nice bit of hopium, which actually basically corresponds to previous market cycles. So we have our Bitcoin halving, and I've shared similar charts. I just like the way this one's laid out. Basically, we've had our bottom. We're going through the accumulation phase right now for Bitcoin, leading into the halving. Do not expect a new all-time high. Now, there's the potential that a Bitcoin ETF gets approved. Markets get mega bullish. 20 billion rushes into Bitcoin within a few weeks' time. Bada bing, bada boom. Bob's your uncle, Fanny's apparently your aunt, and the price of Bitcoin goes to an all-time high before the end of the year. That's possible. But if these insider rumors are true, we don't get a Bitcoin ETF approval for 6 months. Maybe we're in a recession at the time, so people aren't as excited about aping into Bitcoin. Then we get the Bitcoin halving later in 2024. That's when price really starts to take off, et cetera, et cetera. All possibilities on how we could predict, forecast how things could go for the price. 2025, early to mid 2025, if previous cycles are any kind of indication on how things may or may not go, would be a peak price for Bitcoin. Now, this particular chartist gives us a peak up to maybe even $250,000 for Bitcoin, which would not blow my mind, but I'm not going to try and get wedded to these sort of price predictions. Made that mistake last time. Should have taken more money off the table, but I was convinced Bitcoin is going to 100K, and we all make mistakes. Sometimes we get overly bullish, right? So I'm going to try not to get too caught up in the 250K or the 300K calls this time. I think if Bitcoin get to 150 to 180 this cycle, I think that's a pretty damn big move, to be honest. I think it becomes an interesting place where you look at the markets and say, I might want to start taking some money off the table, whether it gets up to 250K at a blow off or not. And you got to remember, blow off tops, if we get a blow off top, or even just cycle peaks, they last for such a short time. Look back at all the previous cycle peaks for all the major assets. You had maybe 10 days to sell at peak prices in the last cycle. There's no orderly exit from the markets. Things are chaotic. Things are insane. Greed overtakes your mind. The lizard brain turns on and says, bet more, bet higher. Your net worth's going to double next week. Been there, done that. We all get caught in that trap in markets. It's hard to resist the temptations of markets when things are really exciting. But that is why we also need to have plans about how we're going to approach the market to try and have more reasonable forecasts for how things could play out, and also have a bear case in case things don't play out the way you want them to for your assets, for your different investments. Some assets are safer than others. Some are less safe. Some might not make it the entire cycle. All these sort of things need to come into play when you start thinking about how you're actually going to be planning for the crazy times in the bull market. We're at the earliest stages of a bull market right now. Even if we get a US recession, that's probably not going to change the situation dramatically. I don't think that would send Bitcoin down to a new low. Always ready to be surprised, of course. But even if we get a US recession, it's probably not going to be like a new Great Depression sort of thing. I know there's still some ultra bears out there. New Great Depression's coming. Probably not. Probably going to be a mild recession if it does come, which could still give markets the ability to pump into late 2024. Now, very big news. Very, very big news for the entire cryptocurrency space, to be honest. Futurama is back, and they're talking about Bitcoin. Cool. I love Futurama. That show is hilarious. But that's not the big news, of course. No, PayPal's the big news, man. PayPal. PayPal is launching a stablecoin. Now, that's pretty big news. Stablecoins, of course, have been one of the most popular use cases for cryptocurrencies. So now, PayPal, one of the biggest financial service companies in the United States, they are bringing out a stablecoins, PYUSD. PYUSD. Designed for payments, backed by highly liquid and secure assets. So backed by US Treasury bills and stuff like that, right? You're able to buy, sell, hold, transfer PYUSD. This is very exciting. So in a few weeks, we're going to see this rolling out. And of course, once that starts rolling out, you get the Curve finance pools launching and all that kind of stuff. It'll start being plugged into DeFi, et cetera, et cetera. You watch, it's going to happen. But this is a very big deal because PayPal's a beast of a company, if you will. And to see them getting in is crazy. As Matt Hoogan from the CIO of Bitwise points out, largest U.S. asset manager going after Bitcoin ETFs in 2023, largest U.S. fintech company going after stablecoins. Now, PayPal has been in the crypto game for a little while. PayPal's not totally new to crypto. Remember back in 2020, PayPal got people very excited about crypto when they started letting people buy Bitcoin and Ethereum, and I think it was like Bitcoin Cash and Litecoin or something like that on PayPal. And then slowly but surely, we saw more services implemented over time regarding cryptocurrencies, but a stable coin, that's big business, man. Right now, as an example, Tether, they're the biggest issuer of stablecoins. And by the way, the PayPal USD stablecoins have been issued by Paxos, who previously issued the BUSD stablecoin, but they got ordered to stop issuing the BUSD stablecoin. But PYUSD is literally the same thing because it's the Paxos dollar coin. It's kind of crazy. Again, mafia-like stuff going on here. But Tether, stablecoins. See, stablecoins are a big business, and not a lot of people fully understand the stablecoin business. Basically, you take your money and you give it to, let's say, PayPal in this situation. PayPal is going to take the $1 billion that we all give them to use PYUSD, and they're going to take that and not give you anything for it except for a digital dollar token, which is nice. but they're going to take your actual dollars and they're going to put them into US Treasury bonds and different stuff like this, and they're going to make a truckload of money off of it. Tether right now, remember, when you hold a USDT dollar token, you're not getting any yield on it. It's just a dollar sitting on your blockchain wallet. They make a lot of money off that, though. So you're not making any yield off USDT unless you risk it in DeFi or whatever it might be. They're making truckloads of money off short-term US Treasury bills and other things that they put their actual cash into. In fact, Tether's been making so much money that they've invested, what is it, $170 million in Bitcoin in the last quarter? That's a lot of money. That's all just from profits off of holding our cash, and we get the stable coins. Stable coins are big business. And of course, they're a very popular use case. As we covered the other day, people in, went to Africa. I think they were in Kenya and was it Uganda? Maybe Nigeria. Anyway, they went to a couple countries in Africa and they talked to people and basically everybody said, we're using stable coins. Yeah, we maybe use Bitcoin or something once in a while. We're mostly using stable coins because that lets them get Forex, that lets them do payments and transfers and all this kind of stuff. It's big. The use case is big. This is one of the killer apps of the entire cryptocurrency space. So it's very crazy. And of course, it's not just PayPal. This is what's so exciting. We're seeing Visa getting into the stablecoin space. Remember, we've covered a lot of stories about them working with USDC, for example. Coinbase, of course, big in the USDC space as well. We're seeing new, novel stablecoin concepts come out all the time. It's getting big. It's only going to get bigger. And of course, which blockchain did PayPal decide to use? Ethereum. Although I imagine this is probably going to go off to a layer 2 at some point. That's my guess here. We are going to see this move off to a layer 2. Maybe it's going to be Coinbase's layer 2. Maybe they're going to launch their own layer 2. Maybe they're going to work with Arbitrum or Optimism. Remains to be seen exactly how that's going to play out. But my guess would be they're going to move off to a layer 2 just for lower fees and less friction for the average users here. But still a damn big deal if you ask me. Now, before we get into some of the big numbers behind PayPal here, just a reminder, if you're not signed up to the Wealth Mastery newsletter yet, you gotta get signed up. It's the best damn newsletter in crypto. Every single week, my team and I, we spend probably about 40 hours a week writing this crazy good newsletter for you. It comes to your inbox 3 times per week. We talk about altcoins, including lots of alpha on altcoins. Talk about airdrops, big money-making airdrops. We talk about DeFi, NFTs, what's going on in the market, the latest news, and much, much more. And it's free. Link down below in the description, or you can go to thewealthmastery.io. Again, thewealthmastery.io and get signed up. You can also check out all of our free content over there. We have a free beginner's guide on the website. You can browse through our previous reviews of altcoins and all that kind of stuff. So go and check it out. It's a great resource. Now, as Alex Kruger points out here, well, many people in crypto hate PayPal with a passion, and for good reason. Remember, PayPal's all about censorship. We've covered over the years different censorship stories from PayPal, and they're all about shutting people's accounts down who don't agree with them, and they've been anti-crypto, and then they were pro-crypto. So, it's a bit of one of those relationships with PayPal over time. But as Alex points out, this could bring millions of people into DeFi with their stable coins. So imagine all those people who have PayPal accounts. They can now just easily switch their dollars over into blockchain dollars, PYUSD, and they can take it out and find interesting novel yield use cases and all this kind of stuff. It's a big deal. PayPal has 400 million active users. We've seen so many big companies getting into crypto recently. It's absolutely insane. Of course, again, PayPal's been here for a while. We're seeing all kinds of big use cases right now, all kinds of things happening. And I know the charts don't really reflect that in terms of there's no price mini right now. It's because the retail herd hasn't shown up yet. But look at what's being built. Big picture stuff. Just because no one's showed up to pump our bags yet doesn't mean stuff's not being built in the background that's going to make this coming bull run the biggest, craziest bull run yet. 400 million active users just got a major fiat on and off ramp for cryptocurrencies. This is the biggest announcement ever for fiat on-ramps and off-ramps for people to frictionlessly move in and out of crypto. Because think about this. If you already got your bank account linked up to your PayPal account, or you've got your credit card or your PayPal debit card, right? PayPal does debit cards. You go, you get your PYUSD from whatever e-commerce store you have or whatever, and you take that, you put it in PYUSD, you put it in Curve Finance or something like that. You make 10, 15, 20% on it with token incentives and all that stuff throughout the year. You bring it back and you can bring it out to your bank account super easy. I mean, this is, again, a massive on-off ramp for the entire industry. 400 million active users is nothing to sneeze at. As Ethan here points out, over the last 30 days, Ethereum peaked at 556,000 active addresses. That's the 30-day moving average of that. Again, PayPal has over 400 million users. PayPal has 782 times more users than Ethereum. If only 1% of PayPal's users onboard to crypto through this stablecoin, just 1%, that will result in 8 times more DeFi users. That's crazy. We only need 1% adoption from this PayPal story to bring huge amounts of money into the market, to bring huge amounts of new users into the market. This is very exciting. And of course, this is, again, why we need to see PayPal integrating layer 2s, because if it just stays on the main Ethereum chain, we're going to see all these people being like, oh yeah, this is great. I'm going to take my PayPal stable coins and go and do something on Ethereum. And then it's going to be like, that's going to be $200 in gas fees. And they're going to be like, screw that, man, which is rightful reaction. That's how you should react to paying those kind of money in gas fees. PayPal needs to integrate with layer 2s and needs to do it very, very quickly for this project to really be successful, in my opinion. Now, there's also been some controversy. Of course, there's been controversy. There's also been some controversy around the PayPal USD coin. As Bitcoin Culture points out, PayPal has been known to randomly freeze accounts and hold people's money hostage. It's all over the internet. Again, we just covered that. It's very true. It's happened many, many times. Their newly launched PayPal USD stablecoin features a built-in asset protection function, which can erase your balance in 2 transactions. It can freeze your coins. It can also wipe the frozen assets off of your account. Now, that's very centralized in terms of its control mechanisms. And you might be going, well, this is terrible. I'm going to use other stablecoins. Basically, every major stablecoin has that function. Now, this is usually used for hacks. So whenever there's a big hack, Tether can come in and say, hey, we're going to freeze that money so that the hacker can't use it anymore. USDC comes in and say, hey, we're going to freeze that money so the hacker can't use it anymore. And that's cool. That's a use case that people can jive with. But there's a problem of a centralized command. Basically, somebody somewhere can shut it off. And this is the risk reward of using stablecoins. And there are stablecoins, there are decentralized options that don't do that. But this is what PayPal is going to do. Of course, PayPal is going to do it because PayPal has to be compliant with banking laws. I'm not surprised that they're going to have to do this. And this is something that's not going to affect 99.9999% of users. And if people start getting censored for their opinions from PayPal, which PayPal has done on their centralized platform before, where they start doing that kind of malarkey on chain, I think you'll see people drop the PayPal USD stablecoin real quick, because Tether, for all of its faults, you can say whatever the heck you want about Tether, about political opinions, about aliens or religion or whatever. Tether doesn't really care, but they will step in when like money's been hacked on chain. I don't think to this date there has been an example of Tether sort of arbitrarily censoring somebody's transactions or freezing their USDT or USDC even doing the same. They've only intervened in those kind of situations as mentioned. PayPal's got a lot to prove here because they have a history of censorship. Will they let their on-chain stablecoin run free or not? Let me know your opinion, of course, in the comment section if you think PayPal will be able to resist the powers that be and not censor on-chain opinions. Now, this next story. Can you imagine sending $4.5 million to the wrong address, losing $4.5 million in Ethereum. Well, one unlucky user has just done exactly that. Pour one out because, ouch, that hurts, man. The Ethereum community is baffled by a mysterious $4.5 million Ether burn incident. So this is an unknown person. We don't know who this is. Their Ethereum name service ID is nd4.eth. They burned, I guess, thank you for your sacrifice in burning 2,500 Ethereum. Hey, there's that. But they burned 2,500 Ethereum. Sent to the wrong address. That's as brutal, man. Now, as they point out here, the exact motive behind this burn remains unknown. Probably just a mistake, or I don't know. If it's not a mistake, somebody needs to reach out to that dude, man, because somebody's feeling bad. If you're just burning $4.5 million for fun or because you're sad, I don't know. But that's crazy. What a mistake to make. Now, to be fair, they still have millions of dollars worth of cryptocurrencies, so they're not totally washed out here, and they probably have other addresses, I would imagine, I'd hope. But definitely has a big hit for them. So the guy who transferred that 2,500 Ethereum, he's a whale who has $1.8 million worth of GMX tokens, $1.4 million worth of the GNS tokens. So there's that. But this is also not the first time that this guy sent money to that dead address. They sent some GNX, some GMX over there as well. So I don't know what's going on in this situation. It's a pretty weird story. Let me know what you think is going on with this Ethereum whale just burning millions of dollars of Ethereum. Dumb mistake. Feeling sad about life. I don't know. Let me know your theories. I'm curious to hear it. But I share this story because people make mistakes. And that's probably what happened here. People make mistakes, man. So if you've made mistakes in this industry, and we've all made mistakes, if you made a mistake sending money to a wrong address or clicking on a link and getting scammed, or hey, how about these whales here? They sold $2.5 million of the Pepe for a loss of $700,000. Ouch. Ouch. They lost gambling on a meme coin, what most people don't make in 10 years. The whale also bought a bunch of the bald meme coin and lost $1.67 million on it. 1,100 ETH down to 200 or 189 ETH they got back. Everybody makes mistakes. Everybody screws up. This is something to remember in crypto. If somebody's been in crypto for a few years and they haven't screwed up, that means they probably haven't taken any kind of risks and probably have underperformed the wider market of people who do take a few risks. But when you're taking risks, you got to remember to scale those risks, use risk management strategies. Don't put $2 million into the bald stablecoin, or not stablecoin, meme coin. Man, come on. Some people have too much money, I swear. I'm going to throw $3 million in the Pepe. I'm going to throw $2 million into this brand new stablecoin that came up 2 days ago. What do people do? This is crazy stuff. Some of these old ETH whales, man, they just have so much money. It's wild. My mind is blown. The amount of money people lose on a daily basis in this market, just getting chopped up, chasing hype, chasing the new shiny thing. They're like dogs chasing cars, man. And even if they caught that car, they wouldn't know what to do with it. They get run over half the time by the car coming up behind them. There's a chance right now in these markets, I believe, to make serious wealth in the coming cycle. But you can't get chopped up like these guys are doing. Be careful about your security, double check your addresses, and don't get caught chasing the meme coin hype. Now, that being said, let's talk about some good Ethereum news, mostly layer 2 news, but also some pretty big news here for layer 1 Ethereum. As Altcoin Daily pointed out, Ethereum has just surpassed 100 million. 100 million. Yo, this is a big number. 100 million non-zero addresses. That means that 100 million Ethereum addresses have been created and have at least a penny or so of Ethereum sitting on them. Now, look, most of these addresses have very, very little sitting on them, but it's a damn big number regardless. To see the growth from essentially 0 to 100 million addresses within, what is that, 6-7 years? It's pretty damn impressive. So my hat's off to you, Ethereum, continuing to be the leader, of course, here in the market. Now, before we break down the layer 2 stuff, because we got a lot of layer 2 news, a lot of DeFi news and stuff as well, just a quick note. If you are investing in altcoins, I have created the altcoin course that I wish that I had back when I started investing in altcoins. So this course is going to take you through all the stuff that you need to know. And look, we cover a lot of this content here all the time. This is all the content in a nice little package for you, where you can come, enjoy the videos, enjoy the content, and get a really great understanding on what the heck is going on with the altcoin game. So it's called Mastering Altcoin Investing. We're going to go over market cycles. We're going to understand how to get altcoins, the best ways to get altcoins, airdrops and DeFi, and how to, of course, not get scammed. Looking at how to build a good portfolio, how to take profits, all this kind of stuff. All this kind of stuff. It's a fantastic course. There's a link in the description where you can learn more about it. So go and check it out if you want to take your altcoin investing to the next level. Now let's talk about MakerDAO. So the MakerDAO DAI savings rate, or the DSR, has been increased up to 8%. So that means you can now take your DAI stablecoins, deposit them into the MakerDAO protocol, and earn 8% a year on them. Of course, see some whales already taking advantage of that. One whale sold over 5,000 Ethereum for DAI, and they also borrowed a bunch of DAI, et cetera, and they piled truckloads of money into that because an 8% rate is pretty damn attractive. 8% is pretty attractive. Hey, that's even beating U.S. Treasuries these days, so that's good. You can get 5% from the U.S. government or 8% from the DAI protocol. Of course, the risk parameters are not exactly the same, and I use MakerDAO, but I understand that it's a smart contract protocol. Risks exist, and the risk of a smart contract being hacked is probably a little bit higher than the U.S. government defaulting. So there's that to bake into your thought process here. Also, some big news for the Mantle layer 2. Remember, Mantle is the one that's backed by BYBIT. So they've teamed up with Lido Finance. So there's a proposal to allocate a chunk of their $370 million worth of Ethereum that's sitting in their treasury into staked Ethereum in exchange for reward sharing. So this has passed. They're now going to do that. That makes Lido the only protocol to have partnered with Mantle. It's also, of course, the beginning of potentially a big liquid staked Ethereum ecosystem coming to the Mantle network. That injects the Mantle ecosystem with literally hundreds of millions of dollars of staked Ethereum. So pretty damn big news for those two big industry players to be partnering up. Now, here's an overview of the layer 2 scene as it is right now. Arbitrum still leading with $6 billion total value locked, still the far and away winner. Optimism, 50% behind in second place at $3 billion. Now, if you look on down, ZK Sync, which was one that I've been trying to airdrop farm, along with a few others, of course, covering all these strategies, of course, in the newsletter every week. But the ZK Sync, they're at 500 million. Let's round it up. And give them the extra 45 million. They're at 455 million. Let's call it half a billion. Round it up there for them. They're at half a billion. Coinbase's base, they crossed over 100 million the other day. They're up to about 134 million, currently sitting on chain right now. So that's pretty good. Total value locked. Others like Immutable X have surpassed 100 million, and Mantle down here, almost at 100 million. They're currently around $94 million. So we're seeing a lot of money coming in on chain. Polygon's ZK EVM definitely not getting the love here, though, only $50 million. Linea, Consensus is Linea, I feel like is the absolute outlier here. Money has, and they're probably going to do an airdrop, but money has definitely not aped in yet. We only have $28 million currently sitting on Linea. So these are the ones that are potentially going to do airdrops. Linea, Polygon, ZK EVM. ZK Sync, potentially Mantle, potentially Base. Now, Base has said we're not going to do an airdrop, but they could do an airdrop. They could do an airdrop. That's kind of what they have to say right now because of the SEC. But when things change slightly for the altcoin scene, they could easily do an airdrop. But hey, don't use these networks based on the thought that you may or may not get an airdrop at some point in the future, because you may not get an airdrop and then you'll be severely disappointed. I thought I was going to get an airdrop and didn't get any free money. Nope. I'm playing around with all these different networks. I have not sent money over to Base yet. That's on my list of things to do. They usually do a lot of that on Thursdays, so I'll probably do that tomorrow. But I have money on Linea. I have money on ZK Sync right now. I have money on the Mantle network. Of course, I'm using Arbitrum on a regular basis as well. But I do need to get some money over on to Base and Polygon ZK EVM. Those two things are on my list of things to do for the week when I do all my on-chain stuff. So keeping an eye on these layer 2 networks. You can see they're growing massively in popularity all the time. As Emperor Osmo points out here, layer 2 wars are on fire. In just the past 14 days, of course, over 100 million bridge over to Base, over 40 million to Mantle, 7.5 million to Linea, ZK Sync, Zora. So we are seeing huge amounts of money flowing in here. And that's where the opportunity continues to be right now, is on chain. On chain. We see lots of opportunity on chain. We see lots of big partnerships happening on chain. Chainlink, by the way, Chainlink bags to the moon. Of course, I have Chainlink, obviously. If you want to know what's in my portfolio, my full portfolio disclosures, risk statements, all that kind of stuff, link in the description for that as well. Or you can find that over on the wealthmastery.io on my disclosures page there. So Coinbase's layer 2 has tapped Chainlink ahead of their main net launch. Chainlink, as always, finding itself right there in the center of all the fun, of all the action, because of course Chainlink does. Chainlink, one of the most fundamentally strong projects out there, which the price has not reflected, but CCIP could be the game changer here. So that's why I got myself a big fat bag of Chainlink, and I'm waiting for Chainlink to go to the moon. It'll be fantastic when it gets there. Now, let's talk about the banks. So I want to talk a little bit about the bear case. I know we talk all the time about how exciting everything is, and it's great on-chain action. The Bitcoin ETFs are coming, and all these other cool things are happening on-chain, and layer 2s are taking off, and it's all great. What if we're all wrong? What if it all goes to zero? Well, it's not going to go to zero, but there's still a lot of opinion that we could still get that recession in the USA. Now, maybe it's going to be a soft recession. It's not the soft landing, but a mild recession. The bear case in this scenario is that the recession comes in, equities correct, crypto potentially corrects even more. And that leads us into, again, all these things coming together, where we have the Bitcoin halving in April next year, where we have the Bitcoin ETFs potentially approved, in February next year, something like that. This all comes together to create a massively bullish picture. We have a little recession. Maybe it's the baby recession, not a new Great Depression. It's baby recession. That finishes. Markets come out of that. Everyone dusts themselves off. And we get mega bullish. And the funny thing is that people think about, well, a recession, it's going to be the worst thing ever. And look, if a recession comes, I don't really care. We're going to talk about it because it's interesting to talk about. And of course, we should know what's going on in the markets as investors. And unless it is a new Great Depression and the dollar goes to zero, USA goes to zero, Bitcoin goes to zero, everything goes to zero. Everything. Then we're probably going to be okay, and like all the recessions will end, and markets will recover, money will be made, and we'll continue on. The thing about bear markets, the thing about recessions that a lot of people tend to maybe forget or lose sight of in the moment when they're living through it, is that they all end. Some are shorter, some are longer. That's all it comes down to. And I take a long-term thesis on many of my investments. And look, I know there's times to get in, times to get out. You got to play smart. But there are some investments I'm planning on holding for a very long time. And I don't really care what happens over the next 3, 4, 5, 6 months. It's not a big deal. I'm more interested in what's going to happen 2 years from now. What's going to happen 5 years, 10 years from now. A lot of people can't even think that far ahead. In the TikTok culture of, if it's not in a 9-second video, I can't comprehend it. If I can't get rich in 9 seconds, that's not even worth my time. Long-term thinking has tended to pay off absolutely the best. So Credit Suisse, the big banks, they are saying recession is coming and stocks may have topped out. Maybe. Of course, we've seen stock markets correcting a little bit this week. Credit Suisse, can we trust them or not? Hard to say. A lot of banks have different opinions. Bank of America, they have a different opinion. For example, Bank of America now expecting a soft landing instead of recession. Okay. All right. Sounds good. Now over in the Money Mastery newsletter, the moneymastery.io, moneymastery.io, we broke down this weekend our tech stock investing newsletter. What exactly is going on here? So Wall Street analysts sounding the alarm. The market has been exceeding expectations, has been gaining 18% since January. However, these Lamborghinis might have to wait. 4 prominent names in the financial industry are sounding the alarm that we might be heading into a bubble. So JP Morgan, the bank's top quant, is warning that the AI hype is creating a stock bubble. You know that having 25% of the S&P 500 index concentrated in the top 7 firms is a strong indicator of an impending doom and gloom scenario. That's one analyst at JP Morgan. Alternatively, JP Morgan, as an institution, is saying, actually, no, there's not going to be a recession. So who do you believe? The analyst at the company or the company's official statements? Again, is it all psyops? We covered the other day, JP Morgan saying there's not going to be a recession anymore. Don't worry, everything's great. Are they lying to us? We know JP Morgan has a history of lying to us. You can't trust almost anything they say, except they know that we can't trust anything we can say. So sometimes they're going to say things that we think they're lying about, but they're not actually lying, but it's all psyops. I don't know, but it's worth considering regardless. Wells Fargo, global market strategist Scott Wren, still wary of an inflation rebound due to economic pressures. And we do have that concern to be thinking about this week as the inflation data is coming out. Pressures like a strong labor market, for example, could continue to cause headwinds here. He believes that sectors behind the rally are vulnerable to pullbacks. On the brighter side, he expects the S&P 500 to end the year at 46 to 4,800, which is above present levels. So that's pay attention to short-term pullback this guy's seeing. BlackRock, largest asset manager in the world, is predicting a roller coaster for inflation and is expecting volatility. We love volatility, though. Volatility is great. Volatility is where money is made. High inflation would raise the cost of operation, which could slash margins for many companies. At the same time, lower inflation also means lower prices for products and services, which also hurts profits. Rosenberg research head David Rosenberg, not optimistic about the current rally, described it as a FOMO-based rally. In short, buy big green candles, get shanked by big red ones. So look, this is always the case, right? We have lots of people on one side saying everything's going to be bad, and people on the other side saying, well, actually, no recession, stocks are hitting all-time highs, everything's going to be great. Who do you trust? I don't know. But this is all short-term stuff. Everything we just talked about, all these people, these are shorter-term things. If the recession comes, if stocks crash, et cetera, we're not going into a new Great Depression, I hope, obviously. But that means that, okay, over the next few months, maybe, things get a bit dicey, whatever. Big deal. As long as you're not all leveraged up and wait for the market to tell you where it's going, right? Be patient. Wait for a trend to establish itself. Accumulate during the accumulation period, et cetera, not financial advice, of course. Goldman Sachs right now, by the way, talking about inflation. Inflation could be going back up. This is kind of something that's definitely worrying the markets right now. So expectations for the US CPI print on Thursday. Goldman Sachs saying it's going to be lower than the consensus view right now. That's their opinion. However, the consensus view of this is that inflation is actually going to be going back up. Where is it at here? Yeah, right. So we're going to be going up to 3.17%. So that means we're going to have a slight increase in inflation from June to July. That's problematic because inflation's been basically nonstop trending down for a very long time here. And if inflation starts trending back up, watch out for a negative reaction from markets. Markets are probably not going to like that. Markets might start freaking out. You're going to see all these opinions coming out. Inflation's going back to 9%. In fact, new highs for inflation coming soon to a market near you. Crash it all. Everything going back to zero again. You guys know how the emotional roller coaster of the market plays out. Right now, inflation has been coming down for a very long time. Even if it goes back up to 3.2%, it's really not a big deal. Remember, the Fed even said that they'd be kind of happy with 3%. Now, they said that like a year ago. Now they're saying, well, it's got to be 2% or we're just going to have to keep raising rates forever. So if it is 3.2%, then the expectation for the Federal Reserve to raise interest rates again at their next meeting becomes even higher. All things to keep an eye out here for with the market. But really, what the Fed should be doing is just watching Reddit message boards. I thought this is a funny one I wanted to share with you. Hedge fund billionaire Dan Loeb says monitoring Reddit message boards is now more important than fundamental analysis. I love it. Hedge fund billionaire laments the victory of meme stocks. Fundamental analysis increasingly taking a backseat to monitoring daily option expiries and Reddit message boards. Of course, we've seen things like Tupperware. Tupperware went crazy. Tupperware is up like 800% or something in the last month or two. Wild stuff. Meme stocks continue to go insane and to wreck hedge funds. And of course, now hedge funds are pretty paranoid and are watching this kind of stuff because they want to make sure to get out of any short positions because all these guys do is just shorting all day long. People like some of those companies and they pump them like crazy. And of course, the Wall Street Bets story around GameStop and stuff. What a story. What a great story that was. And now they've got the hedge fund billionaires scared, which I think is hilarious. Now, of course, if we do get a bearish scenario for stocks, probably not the best scenario for our crypto coins either. As Mike McGlone points out, Bitcoin is riskier now versus the Dow than when the price of crypto first matched the index back in Q1 of 2021, which may have bearish crypto implications. He said, my concern is that the stock market may face a normal recession-related decline. Nothing too dramatic, right? Normal. But what's that mean for Bitcoin? Potentially nothing good. Short term. So we'll see how that plays out. Now, of course, we have the deadlines for the Bitcoin ETFs coming up as well. What implication does that have for the markets? If we get denials, actual denials, we're not talking about delays. I would say we should expect delays, and we're probably going to get delays announced, and then the market's going to have a temporary dump because people for, oh no, they're delaying the Bitcoin ETF. I better sell my Bitcoin now before it gets approved in 6 months. Okay. But if we get denials, that could definitely take the wind out of the sails of this entire narrative. Even one denial will be like, oh, well, if Ark gets denied, is BlackRock really going to get approved? If Grayscale loses their lawsuit, which people are in favor of them winning right now, the odds favor Grayscale to win that suit. But if they lose their lawsuit, again, this could take the wind out of the sails of the entire spot Bitcoin ETF narrative. Because we know the SEC hates you. They don't want you to be safe. They don't want to protect you. They want to protect the status quo in Wall Street, which is kind of why I think BlackRock's going to get their Bitcoin ETF approved, because they are the big player. DeFi investor pointing out, he says it's hard to feel bullish right now. Retail interest in cryptos at yearly lows, top total stablecoin market going down only. 99% of altcoins are slowly bleeding to death. The SEC likely to postpone its decision on Ark's spot Bitcoin application. Good news barely impacts the market. Yeah, like PayPal yesterday, big news, market did almost nothing. Crypto funding keeps decreasing, volumes are super low, et cetera, et cetera, et cetera. He says, does this mean that you should sell everything? Not really. Maybe it's a good idea too. Trade less, focus more on long-term investments, refine your trading and investing skills, and research new products to get ready for the next wave. And that's the thing I think I want to hit home here, is that it's a very interesting time in markets right now, but it's a time when not a lot of people are paying attention. Everyone's kind of a bit over crypto to some extent. And I know if you're here watching this, you may not think that, but a lot of people do feel like that. A lot of people don't have the strength to go through, the psychological strength to go through the bear market, the FUD, the craziness. And they're going to say you just got lucky, as always. But you didn't just get lucky, you worked for it. Remember that. And while all these things, there's low volume and low interest, et cetera, that just means it's a great time to accumulate. That's the reality of the situation. I'll tell you when's not a great time to be buying. When the Google search interest for Bitcoin and crypto or whatever your coin happens to be hits 100 again. That's a time to be saying, whoa, whoa, retail's here, the herd's arrived, the watering hole's getting pretty damn busy. Maybe I'm going to leave. Because that's the reality. Most people don't want to pay attention when prices are cheap. They only want to buy when prices are high. And most people in the market buy high and sell low. And that's why they lose. You're here now, you're paying attention, which means you probably have a pretty good chance that you're buying low and hopefully you're going to sell high. It's really just that simple. Now, let's open up the floor to some questions. Let's talk. Let's talk. What questions do you have for me? I have 10 minutes or so, hang out with you guys and answer some questions. So let me know your burning crypto questions that you want to have answered. And I'll try to give my opinion on them as always. Of course, if you're asking about, Lark, what's your opinion on my random altcoin? I may or may not have an opinion on your random altcoin, but we'll see. Sometimes I do, sometimes I won't. Kaio, top 5 altcoins. I can tell you what my top 5 altcoins that I own right now are. That's perhaps something useful for you. I can't say, of course, what, like, I don't know, the 5 best altcoins for the next cycle or whatever are going to be, et cetera, et cetera. Right now, okay. If we count Ethereum as an altcoin, I'm not going to count Ethereum as an altcoin. Let's say excluding Bitcoin and Ethereum, which make up 75% of my portfolio. eGold, 2.3%. What do we got here? We're not going to count USDC, which is around 5%. Chainlink, 2.1%. Trader Joe, 2.3% of my portfolio right now. What else do we got here? Oasis, 1.7%. Arbitrum, 2.5%. That's my top 5 coins, I think. Yeah, that was 5. That's my top 5 coins in my portfolio right now. Okay. Still bullish on Moonbeam and Wilder World, of course. Yes and no. I would say with Moonbeam, I feel like they've got, with so much competition, they have a lot to prove in the coming cycle. Still holding a big bag. Quite a big bag. It's was 1.5% or something like that of my current portfolio. So it's a pretty decent sized bag of Moonbeam. And I think that it has a good chance to do well. It'll have that narrative moment, especially when we see Polkadot trend again, which I think we will around Polkadot 2.0. So we'll see how that goes. Wilder World. I mean, look, they've done some great work on putting together some really good displays of their metaverse. Now let's see the real thing. Let's see the real deal. When can we actually get into that metaverse? When can people actually start playing in that metaverse? When will metaverse as a topic trend again? So still holding both those. Okay. Can I marry my BTC bag? Asks Ryan Birchfield. Of course you can. You can marry any bag that you want. That's without a doubt your prerogative. Now, the idea of marrying your Bitcoin bag, it really comes down to what is it that you want out of your Bitcoin? And I think it's an interesting question. Do you want at some point to trade your Bitcoin for millions? Do you want to use your Bitcoin to buy property or gold or cars or whatever it might be, watches in the future? Maybe you just want to use it as a savings account that you're not going to take money out of, because that's one of the things with Bitcoin. There's not really a safe way to get yield on it. We've tried that with centralized lenders. That worked bad. We've tried it with DeFi. It also worked bad. So you really just need to leave your Bitcoin kind of chilling there. Unless you're a Bitcoin miner, your Bitcoin just sits there. It's kind of like gold. It doesn't really do a lot. And that's fine. Price goes up over time. But price goes up over time to what end? Now, you can take loans against your Bitcoin at some point, and that's in many jurisdictions a tax-free event where you say, okay, my Bitcoin's worth $500,000 right now. I'm going to put it up as collateral, take a $200,000 loan to do something. You still pay that $200,000 loan back at some point. So you still pay the interest on that, et cetera, et cetera. So yeah, there's pros and cons to doing that too. But it really depends on what you're planning on doing with your Bitcoin. You got to hold it and take it to your grave with you. I guess we can thank you for that. If you take your private keys to the grave, take a few Bitcoin out of circulation, that's cool, I guess. But at some point, you're probably going to want to do something with your Bitcoin. What that is, it's a different question. How long that takes for you to get to that point, different question. Maybe you're holding your Bitcoin until you retire, and Bitcoin's worth $1 million, we hope, right? You're still going to want to sell some of it at that point, or use it to buy things alternatively. Don't necessarily have to sell it, because by the time we retire, I don't know how old you are, Ryan, but from your profile picture, you don't look that old. So by the time you retire, I hope that Bitcoin's worth $1 million per coin, and you can just spend it in the real world down at all your local shops. So that's my thoughts on marrying your Bitcoin bag. Oh, I like this question. Hold on a second. Coin Bob. What do I do if my cryptocurrency goes to the moon? Do I put it in stable coins and spend slowly? Put it into crypto trust inside an LLC? Go to Portugal? Keep all of it on the Cook Islands? These are interesting questions. And these are questions that it's good to be having now. The conversation is good to be having now before things get crazy. If you want to move to a more tax-friendly jurisdiction, you need to do that before markets go crazy. Because if Bitcoin gets up to $500,000 and you decide, heck it, I'm selling, well, you're going to have to pay taxes where you live. Putting it into a trust doesn't necessarily, it might help. Putting it into a trust, and again, I'm not a trust lawyer or anything like that, just my thoughts on it. Putting it into a trust is an interesting thing, but it doesn't necessarily save you from still having to pay your taxes and stuff like that. It just protects that Bitcoin potentially a bit more from, your business activities and stuff like that, for example. Do you put your money into stable coins? I mean, maybe, yes, sure. But then you also have the issue with stable coins of, well, shit gets pretty crazy sometimes. We saw this last bear market, USDC depegged, and we've seen DAI depeg, and we've seen USDT depeg at times. You saw UST go to zero. I mean, I'm writing up a big report on my entire plan for selling, what I'm going to do. And I'm going to share that with you guys when I'm done writing it in the newsletter and here on YouTube as well, and Twitter and Rumble and wherever else we're broadcasting these streams at. But I think when I sell my altcoins, most of the money I'm going to take out of the market. Probably like 80% of the money I'll take out of the market. 20% I'm going to leave in stable coins for opportunities as they come up. But also just probably waiting for markets to really bottom out and then re-entering positions potentially. So there's lots to that. And if you are planning on moving countries, you want to do it before the markets get crazy. You want to be there already. And depending on what country you're in, like if you have a US passport, taxes are going to follow you anywhere in the world. If you have certain other passports, maybe Australia or New Zealand, there's going to be certain implications around your house and your residence status and there's lots of things to consider. So if you are considering doing this for real, now for real is the time to start thinking about it and looking into it, looking at second citizenships. A lot of people can actually get second citizenships through descent, for example. So if you have a great grandparent or even a grandparent who was from Portugal or Spain or Italy or Ireland or the UK or Slovakia or some of these other places, chances are you can get a second passport. You can also buy passports in the Caribbean if that's something that you're interested in. And those can give you more options to go to other countries, to go and live in other countries, places that are potentially more tax friendly. You can also get residence permits in some of these countries. Again, you want to think about this stuff before the markets get crazy. Because tell you what as well, when the markets get crazy, everybody's going to be thinking about that. And everybody's going to be trying to do that. So all these different firms and stuff that handle that kind of stuff are going to be swamped. Okay. Getting off on a tangent there. Daniel Gonzalez, Coinbase's layer 2 integrates with Chainlink. Bullish? Yes. Yes. Thanks for super chat. I agree. Bullish. 100%. 100%. It is bullish for Chainlink. It's great for Coinbase, of course, as well. Now, question, does that move Chainlink's price? I feel like nothing has moved Chainlink's price significantly. Even CCIP didn't do that much. But hey, I think Chainlink is going to go crazy at some point. I think $100 in the next market cycle is not off the table. Potentially more, but I'm not going to get too crazy with price predictions here. But yeah, it's definitely a bullish event. Mikey, Lark, do you own any Solana? I do not own Solana as an investment. Now, I do have a little bit of Solana, maybe like, I don't know, 5 Sol or something like that. It's an irrelevant amount that I have for my Solana wallets. So I've got 3 or 4 Solana addresses. They've each got like, I don't know, 1 Sol on them. Not to say that Solana is like, something that's not going to do well next cycle potentially, because I think it's got a lot of potential to do well next cycle, but I can't own every coin. I can't position myself for every coin. And Solana is not one that I'm currently investing in. investing in, other stuff. Arbitrum, for example, really bullish on the whole layer 2 thesis. I might invest in some other layer 2s. I'm looking at other stuff like Avalanche. I really like Avalanche. I don't know. Maybe I should put my money in Solana, not Avalanche, but I really like Avalanche. Really like what Avalanche does. I really like a lot of the stuff behind it. And that's kind of the one I've chosen, not Solana. But that's personal choice. I'm not telling you what you should do with your money. If you've got a good thesis for why you think Solana is going to do well. Like I interviewed Raoul Powell recently. He's super bullish on Solana, and I get it. I get why you would be bullish on Solana. I see the potential, but my money's not there. Okay, let's do 2 more for today, and then we'll finish it up. I have only one question for you. Do you want me to hurt this bunny? Oh, that poor bunny. That poor bunny. Okay. That was a funny short. I have fun doing shorts. Okay, where are we at? Arman Yazdi is the last question. For a particular coin or be integrated with X Twitter, how do you think it's technically possible? What is your guess? I think we're going to see multiple cryptocurrencies integrated with the X app eventually. I don't think Twitter's going to launch their own coin. It's too problematic from the SEC, I would imagine. I could see them integrating coins that I think are safe. So they're going to integrate stablecoins. Stablecoins are pretty safe. They're going to integrate Bitcoin, hopefully in the Lightning Network. They're going to integrate Ethereum. My guess, all guesses, all speculation. I don't know. Dogecoin, because Elon Musk likes Dogecoin. All these safer options. And how does that technically work? I mean, we have lots of options already. You can actually download like applications to put in your browser and allow you to send lightning tips to other people using the Bitcoin Lightning Network on Twitter already. So this technology is already there, and it's not going to be super complicated to implement cryptocurrency tipping into Twitter or X now. It's not going to be super complicated to allow for account-to-account payments using cryptocurrencies. It'll be interesting to see how the custody of all this goes. Are you going to get your own private wallet with your private keys, or is it all going to be custodied by Twitter? A lot of questions we don't have answers to yet. It'll be interesting to see how all that plays out. But the X app also is a very big potential onboarding moment for crypto. Yeah, remember, PayPal, 400 million users. 400 million users. Then we have Elon Musk's X app, which is it also about 400 million monthly active users on Twitter, X. It's going to take a while to get used to that. It'll be interesting. That's potentially 800 million new people. I'm sure there's a lot of crossover between people who have Twitter accounts and PayPal accounts, sure, but up to 800 million people are going to be getting access to cryptocurrency accounts in the next few months. And that's very exciting. Okay, guys, that's it for today. Super, super grateful for everybody who came out to listen to today's conversation. Seriously, I love you guys. Thank you so much for your time. I hope that it's been an informative stream for you. I hope that it's been a great conversation. I hope that you've learned something and helped and stay up to date with the news and all that stuff. So I hope you're making money, of course. Key thing in the crypto markets right now. Peace out, and I'll see you next time.